Man, you already know what's going on, baby. Gang. I'm back with another video. Guys, it's been a while. For those who are new, welcome to the channel. For those who aren't new, I'm back, baby. It's been a while since I've made some videos, and we're going to start this up one more time here. So today's video, we're going to talk about the FOMC meeting. This is some great catalysts that we can use in the markets to make some quick money. It's a quick move, but I'll show you today how to play it, what FOMC even means, and kind of what's happening in the near future for the stock market. So before I get started, baby, you know what to do, baby. Smash that like button, hit that subscribe button, guys, and turn on the notification bell so you can get notified as soon as I make an upload every week coming your way. Now, guys, if you've been wondering where I've been for a while, I've actually been working on a stock trading service, okay? If you guys are interested in joining, let me know or check that link down below, guys. We simply just show people the ways of the stock market. It's more educational, okay? We don't offer financial advice, but if you'd like to learn some goon advice and learn how to trade, baby, that's for you. Let's jump right into it, guys. FOMC meeting tomorrow. So what is the FOMC? The Federal Open Market Committee, okay? These guys are significant. They're essentially the Federal Reserve. They're making a decision on how much to hike interest rates, okay? This is significant. Why are they doing this? Because inflation's super high. So what do they need to do? They need to increase interest rates. Why? Because companies use interest rates as a means to borrow money, okay? Every company, right? All these big companies, they're borrowing millions, if not billions of dollars. If the interest rates are really high, it's going to discourage spending, even down to the average consumer such as me and you, going to go buy food, gas, whatever. If they increase these interest rates, it's going to discourage spending, ultimately tapering down inflation. Now, you won't see a lot of these interest rate hikes really take place until about March of 2023, but we need to pay attention to it now, and it gives the market a little bit of boost. Now, who runs the FOMC? Who runs the Federal Reserve? This is the chair of the Federal Reserve, okay? Jerome Powell, a lot of people go by is J Powell, okay? He's the man. Now, this is all happening tomorrow at 2 p.m. Eastern, so make sure you set your alarms. This is really significant, especially if you guys are going to be in a position. You need to be really careful because your stock's just going to pop like that. It's either going to go up, it's either going to go down. Something volatile is going to happen. And we're going to pull up the charts here soon. I'm going to show you guys exactly how to play this because we just don't miss on this, okay? And it's really easy. You just have to be quick, okay? We'll show you. Like I said, it's tomorrow at 2 p.m. Eastern, okay? Wednesday, September 21st, at least as the making of this video. It's coming in the near future, okay? So this video might get uploaded on the day of. Either way, just know it will be September 21st, 2 p.m. Eastern. Now, what's the market looking for? Okay, this is very important. The market is looking for a 75 basis point hike. There's speculation now we might see 100 and maybe even 50. We don't want to see less. We don't want to see more. We want 75 on the money. Whatever the market gets, the market's going to receive very well. If we see anything else, the market might not receive it that well. Now, another thing we got to look out for too is also what J Powell will be saying in his speech following the announcement of the officially declared basis hike, right? So even if he gives us 75, the market might not respond the greatest if he gives us some kind of, detrimental news, right? If he gives us bad news, like, oh, we're still in a recession, dog, but I'm going to rate the hikes. It doesn't matter, okay? The market won't receive that well as well. So you need to pay attention to a few things, but those are the two major ones, okay? Let's go to the chart here. Now, if you want to follow along, if you want to know how to trade this, guys, this is important. Here's what I'm going to do. Now, I benchmarked the S&P 500. This is kind of what all the traders do. They look at the S&P 500. This is a good benchmark for at least the U.S. economy or the U.S. stock market, okay? It represents about 80% of it. All right, so these are the top 500 companies in the U.S. stock market. Now, SPY is a way we can look at this as well. This is an ETF. This is fun if you like trading options, this, that, and the other. Now, we're going to look at SPY for this. It's the same thing. It's about 1 decimal point over, right? The S&P 500 is probably 38,400. The SPY is 384. Okay, you see how that works? Now, SPY recently, okay, since about June. Now, this is SPY on the daily chart, okay? Every candle here represents 1 day's worth of time. Now, SPY, since about the middle of June here, okay, June 17th, we've been holding this trend line here, okay? It's been serving as a support. We've been forming higher lows, okay? You following? Now, that's a good thing until of recently. So about this point right here, this inflection point, we had that inflation data come in really hot, okay? So a few weeks ago, the market had inflation data came out, okay? And it didn't come out the greatest. It was actually higher than expected. So it came out at about 8.3. The market didn't receive that well, and we actually had a break below this support line here. Now in the future, okay, before we get into the FOMC, into the future, I want to talk about where this could be heading next. Now, I definitely think there's some more downside for SPY because overall, we're in a bear market. Overall, we're downtrending. I would expect such. Now, we could be seeing some things such as a dead cat bounce or a retest of this old support. Old supports tend to become new resistance. I would expect this to come up here, maybe float, and then reject and go further back down. It really just depends on the results of the FOMC meeting. If the market receives it very well, we might come up, test this, and then be back up in this territory up here. It just really depends, guys. So that's the major thing I'm looking for. In these next few sections, let's talk about how we can play the FOMC meeting. I'm going to show you guys personally how I like to play it and why this strategy works so well every single time. It just requires a little bit of patience. Let me share it with you here. Now, we're going on the daily chart here with SPY. One thing I want to pop up, right? Let's look at old data, right? This is very fundamental. Every time you guys take on a trade, try to look at the old history of it, right? How did this stock react before to this announcement in the past? Very easy things that you can do that'll give you an edge. Now, in the past, the last few announcements was July 27th, June 15th, and May 4th. Now, I already have those marked down for you. Let's pull them up here. Now, I'm simply going to do this. I'm just going to look at the last few. Okay, we're going to come here, right? July 27th, and we're going to go on a lower time frame here. Let's go on the 10-minute. Okay. So July 27th, we're back in time right now. This day hasn't started yet. Let's let it play through. Now, typically the day of the FOMC meetings, in my experience, what I've normally noticed with the markets is it's a little more flatline or it's chopped. Just bear that in mind, especially if you have any positions you're trading this day. Now, penny stocks might act a little bit different, right? A little bit choppy, and then boom, you see this? What I want to do is pull up the volume indicator for you guys here. Now, look at the volume here. It's spontaneous. It's coming out of nowhere. Why? Because the FOMC meeting started, okay? FOMC, like I said, it's 2 p.m. Eastern, which is 1 p.m. Central my time. That's why it says 13 o'clock down here, right? Military time. And you can see how much volume incrementally, I mean, exploded out of nowhere. Let's look at the last time, okay? So we looked at July 27th. Let's look at the time even before that, just to even get even more of an idea. June 15th, just to get a little more data, okay? That way we can prepare ourselves that much more. So we can go back in time. Actually, back here, we don't even have to do bar replay. Come back here. Same thing, guys, right? Market traded kind of flat all day, okay? Market open again represents this section here in case you guys are lost and you're not familiar with this trading platform, right? Traded flat all day, had that meeting. Okay, the same thing, about 1 o'clock, 13 o'clock, boom, huge explosion. Now, it doesn't mean it's going to go up every time. Here's how I'm going to show you guys how I like to play this. I keep it real simple here. Now, I'm going to give you guys the sauce, baby. I'm going to give you a little cheat code here, okay? You ain't ready for it? Check this out, okay? The 9 EMA, it likes to slap. All right, so let me get the 9 EMA in there. So I like to use the 9 EMA. One thing I like to look for too is VWAP, all right? Little sauce, little secret. Now, VWAP might not be applicable in this term, so let's get rid of that. But the 9 EMA is going to be an easy one to follow. Now, what I like to look for, okay, I keep it on higher time frames first of all. So when I'm trading FOMC, I keep it on a higher time frame. And I like to stay very patient, okay? So my secret time frame is anywhere between the 5 and the 15 minutes. So I'll keep the 5-minute up, the 10-minute up, and the 15-minute up, like all 3 charts on SPY, okay? Or QQQs might be a good one to watch as well, which is the NASDAQ. And again, this strategy works more if you're trading the indices, not if you're trading like, you know, your favorite stock, you know, Tesla, Meta, whatever. Okay. Now, I wait about anywhere between 10 to about 1 hour, 10 minutes to 1 hour. So 10 to 60 minutes, I will wait. I wait for clear direction. One thing I like to do is wait for at least 2 or 3 10-minute candles to paint, because this can get very volatile. A lot of the times you will see a candle absolutely launch within the first 10 minutes. Do not FOMO. Okay, because you might see a huge pullback to follow, and then after that you typically see the rip. Okay, so it's kind of like a spring-loaded action. That's why I wait, right? 1, 2, 3 candles hypothetically. Okay, so wait about 3 candles ish. Again, not financial advice, just sharing with you my strategy. Wait about 3 candles on the 10-minute chart, and then when it gets really clear and I have that clarity, boom, I hop in, I grab some options. Okay, again, not financial advice. I grab some options. They're highly volatile. I don't go too heavy on the position just in case I'm wrong, and then I use the 9 EMA to ride that shit up, baby. Let's make some money, baby. Now, hopefully you guys found this video useful. If you did, let me know. Leave that like and leave a subscribe as well. Comment down below if you guys are confused at all by the strategy, or if you want to know a little bit more about the FOMC, I can explain furthermore for you. No problem at all, guys. Again, I encourage you guys to subscribe. And again, I also encourage that you guys check out our stock trading service. If you want to know a little bit more about tidbits on how to trade throughout the stock market, we're trading everything, baby. It don't matter. We're trading penny stocks. We're trading options, Forex, crypto. We got you covered. We focus more on the learning part so that the earning part can come second. And it certainly will, baby. Gang. It's good to be back. Welcome to the 9 to 5 Stock Trader channel. And I'll see you guys in the next video.